So a big day for Nigeria. We had, of course, inflation figures out yesterday, 11.9% year-on-year for February from 12.6% year-on-year in Jan. And then, of course, we're waiting for that MPC announcement today.
Yeah, it's a big day in Nigeria today because of the MPC outcome. But if you ask me, I don't think the expectations from the market point of view is that much because from all indication, the market expect the MPC committee to hold the MPR rate stable at 12%. A reason being that they've said so many times that they don't intend to react to the initial fuel price increase and initial way we've seen inflation move to 12.6, and interestingly it was 11.9 as at the last outcome. The FX rate, FX demand, which was a major part of the policy decision, has been stable since the beginning of the year. We've seen a 4.4 billion sold on a year-to-date basis to the market compared to 5.5 billion year-to-date as at 2011. So the pressure on exchange has been very, very minimal. We've seen a lot of offshore flows coming into the market, which has helped to keep FX rates stable. We've seen a lot of oil company sales into the market, NNPC flows all coming into the market. This has really given the central bank a lot of boost in the sense that the demand at their window has been very, very minimal. We've also seen the investigation on the NNPC side helping to keep import demands very low. So looking at all that, our expectation from a market point of view is that the MPC is going to hold the MPR rate stable, and I don't think there's the cash reserves rate is also going to be, there's not going to be any hike. So we see that being stable, and also we see them keeping liquidity ratio stable.
Okay, well, I mean, the tightening that we have seen in the past is said that it's still basically feeding through into the market, and now with the removal of that fuel subsidy, we could actually see a very different scenario playing out into this year. What kind of numbers have you been pricing in going forward? And as I mentioned, that inflation number sitting at 11.9%, are you anticipating that single-digit number to be hit going forward?
Well, all the permutations is that we should see inflation sometimes mid-year at around 14 to 15%, but after that we see it's trending towards single digit again. If they're going to achieve a single digit at the end of the year, might be a tough call, but we'll see it coming down towards the end of the year. I don't think single digit will be achievable this year, but on the long run, it is possible that we achieve the single digit unit on inflation.
All right, let's also just touch on what we've been seeing with regards to the auction. We've got Treasury Bill auction coming into the market next week. We know that a lot of auctions have actually been put on the sidelines. It's said that there is pent-up demand, so we will see a much better yield going forward. Are you anticipating this as well?
Well, the auction of Wednesday, we have the 91 and 182 day auction. There's 37 billion on offer for the 91 day and 63 billion on offer for the 182 days. Interestingly, this week we are not seeing the 1 year auction. The 1 year auction is where the offshore guys have been doing a lot of carry trade on since the beginning of the year. So what it means is that we might see more of local demand in the 182 day and 91 day auction, and that, in my opinion, is going to make sure that is going to help to assist the yield to be stable compared to what it was at the last auction. Offshore flows have really helped to bring down yields on this on the Treasury bills front. But if we don't see much of the offshore flows in this auction, then I expect the yields to remain stable from where it was the last auction. Current secondary market rates are just slightly below where the auction came out. 182 days around 15.2 right now in discounts, and 14.2 also on the 91 day in discount form. So I don't see major deviations from this level, and if peradventure the offshore guys change their mind and start investing in the 182 day front, then I might see the yield dropping about 50 basis points.
Okay, Samuel, also just very quickly, let's touch on the Naira. We know that money supply is sitting relatively benign, at a relatively benign level, so this could actually be positive for the Naira. Do you see this level being sustained into this year? And we know that this is the target of the central bank.
Well, the target of the central bank is a plus or minus 3 around the 155 levels. If you ask me, this year I think we're going to see a lot of stability in exchange rate. The offshore flows are still a significant part of this market. Nigeria is very attractive at the moment, offers one of the highest carry trade you can see in any emerging market at the moment. And also with the stability in terms of exchange rate, that will help us to see a lot of flows in this market. And if we see more flows, who knows, we might be going on we might see some appreciation towards the end of the year. But if you ask me, I would want to say that we'll see exchange rate being stable for this year.